Good morning, everyone. Paul here, coming at you with a Crypto Coffee update where we talk about all of the news, events, and happenings in the exciting and emerging world of decentralized finance, all while enjoying our fresh cup of coffee. Cheers. And here we are today at BitcoinTradeVolume.com, the true Bitcoin trade volume that omits wash trading. That is metrics that are derived from the recent Bitwise report that revealed 95% of Bitcoin volume is indeed fake. However, the real volume floats around $540 million over the last 24 hours, still a very healthy amount, and a materially significant 247 million of that is from Bitcoin futures 24-hour volume, primarily from the CME group. And also some exciting news, Bitcoin has broken above 6,100, something some individuals are very excited about. Others are a bit more tepid in their enthusiasm, and they're curious if this will be something that will precede a test of another lower price before eventually breaking upward and testing maybe even new highs over time. I'm curious what you guys think. Do you think this is the sign of a slight thawing of the frigid bear market, or perhaps this is just a too good to be true moment in time that inevitably will cause another dump down into the lower ranges, perhaps as low as 4,100? Moving right along, we can see that one Bitcoin whale isn't staying by the sidelines as this price moves upward, and $18 million worth of BTC has been moved to a wallet. Individuals are speculating, speculation really abound as to whether or not this is going to be an entity that will sell and perhaps cause some downward pressure on the markets, or perhaps if it's just an entity that wants to be ready in case the price moves upward and take some profits as that occurs. Really only time will tell, but I'm also curious what you think of this. Is this something that may ultimately cause some harm to the upward price of Bitcoin, or perhaps it's something that's so materially insignificant that it won't cause much of an hiccup? Also, we have Fidelity offering cryptocurrency trading within a few weeks. Earlier this year, they decided to offer a custody service, something that's incredibly important for many individuals as they move their digital assets, given they want to keep them safe and secure and have a professional third party facilitate a lot of the activity on their behalf. While joining the likes of Robinhood and more, it seems that Fidelity wants to jump even further into the Azure pool of cryptocurrency trading, albeit that pool can be a bit opaque at times, as we've seen with the Bitcoin volume being less than straightforward on some entities such as CoinMarketCap. They show a like nosebleed amount, $16 billion. That's not the case at all. Actually, significantly less than that. 95% of it, again, is fake. But that isn't stopping Fidelity. Fidelity is indeed jumping in full force and offering cryptocurrency and digital asset trading on their clients' behalf. So, wonderful stuff from Fidelity. And as we all wait for the backed platform to launch, something that seems to have been put on ice for the time being, it's nice to see an entity filling those shoes, at least tenuously. A bug on Tron as well could have crashed the entire network. This is something that's very interesting, and from a technical perspective, something to consider, especially in relation to incentives on any kind of blockchain network. It's a smart contract that is a very heavy load to execute. You can see it takes about 2 to 3 minutes for a modern MacBook Pro to process. Now, hopefully none of the delegates on the Tron network are running their nodes on a MacBook Pro. That wouldn't necessarily be the best hardware to do so. But suffice to say, it definitely could bog down the system, and this particular contract required 6 of these operations, meaning that even powerful machines, if spammed with this contract, which requires 6 operations, 2 to 3 minutes apiece across multiple contracts being spammed, well, ultimately that could cause a DDoS attack on the network, and you can see here all or 51% of the super representative nodes, and could render the Tron network unusable or make it at least temporarily unavailable. Luckily, this was disclosed. The individual paid the developer Sresta $1,500 for finding this bug and having it resolved. So this is a great way for individual companies and platforms with some coffers to help to incentivize developers in the community to try and help out with solving these potentially major issues on these various networks. One thing's for sure though, I love this portion here. Networks like Bitcoin and Ethereum have cost to transactions to prevent this kind of simple attack. XRP Ledger has a cost attached to creating new addresses for this reason. Networks that are vulnerable if resources, or networks are vulnerable if resources are too cheap or free. This is something that I've mentioned previously. It's all about lining up human incentives. There's nothing free in this world. Everything costs energy, time, money, or attention. And the fact that these networks indeed do cost energy means that it's being offloaded somewhere. And these super representatives are doing a lot of the heavy lifting for the Tron network, making them disproportionately juicy targets if, say, an individual wanted to attack said network. So this is an interesting example of how various incentives line up in these ecosystems and may or may not ultimately leave a network more open to various types of attacks in some respects, or less vulnerable to other types of attacks. There's no one-size-fits-all solution, but one thing's for sure: by not having this financial component to transactions, it seems Tron and as well EOS, due to the fact that they have free transactions, are disproportionately susceptible to this type of DDoS or spam attack, with various mechanisms, conceptually at least, preventing such events from unfolding. Now, a huge piece of news is Binance's hot wallet was hacked. Yes, the funds are Seifu exchange indeed. Apparently is not so Seifu. It all came out in one transaction, 7,000 Bitcoin, valued at $42 million at current valuation, perhaps even a little bit more with respect to the $6,000, $6,100 Bitcoin price jump we saw, which interestingly enough occurred after this hack, which may attest to the strength of this upward movement. But one thing's for sure, one thing that's not moving upward is the spirits of the folks at Binance. This is not something that's the most rosy for the community. CZ said they had to perform some unscheduled server maintenance when they're depositing things for a couple hours. Ultimately, this kind of blossomed into, it turns out that indeed there was a breach of security using API keys, 2FA codes, and other tools that ultimately allowed the attacker to drain user funds and homogenize that into one outgoing transaction. Luckily, there is something called the Seifu fund, SAFU fund, meaning that there will be no losses for the users. This will be something that Binance will have to absorb, and luckily it was only the hot wallet, so 2% of their Bitcoin holdings were exposed, and it seems that isn't even the majority of what was taken. They took less than the 2%, which is good if there could be something said to be good in this situation. That users won't absorb this loss personally. That's a very integritous thing, at least in my opinion, and good to see from Binance. And it's unfortunate this has occurred. But this demonstrates why it's so critical for exchanges to have a just massive minority of their funds in their hot wallet and keep their funds secure and safe off of any given hot wallet for their exchange purposes. That's why sometimes large withdrawals can take long amounts of time, but ultimately it's for the security of the entire ecosystem as it exists today. Perhaps that will change in the future with decentralized exchanges, but as with many of the topics we cover, the situation is still unfolding. The ecosystem is still evolving, and time will tell. Now, a bit of a social faux pas, perhaps under pressure, CZ made some comments that left some users perturbed, confused, and angry in some situations. They decided not to pursue what's called a reorg attempt. This is when they roll back a blockchain by essentially forking and mining blocks going forward, to kind of reset the history of the entire blockchain. It's a very resource intensive and energy intensive, I guess you can call it a tactic. Many times it is an attack that occurs in the network, but many times actually, probably the majority of the time, this happens naturally. This is Satoshi's longest chain rule at play, something we've seen time and time again in this series. And for those of you who may not be familiar, what this means is if two miners who are mining on the Bitcoin network happen to both discover a block at the same time, then whoever discovers the next block, or whichever chain discovers the block after that, that becomes the longest chain, and the shorter chain becomes invalid. This is generally not a major issue, but it is a feature of the Bitcoin network that CZ and Binance floated of perhaps taking advantage of and using this mechanism to roll back the Bitcoin blockchain, something that's never been done before, at least in an intentional manner, to help to secure user funds. As said, this led to a litany of outcries, some of support, but those were in the great minority. Many individuals saw this as something that should not even be discussed. This is what he said, CZ said, when being interviewed on another topic. Do we want to issue a rollback on the Bitcoin network? Because right now, the 7,000 Bitcoin is far higher than if we distribute that to miners. It would be far higher than what they got paid for the last few blocks. So there's a financial incentive perhaps for miners to play along. To be honest, we can actually do this probably within the next few days, but there are concerns if we do rollbacks on the Bitcoin network at that scale. It may have some negative consequences in terms of destroying Bitcoin's credibility. So again, the team is still deciding that, and we're running through the numbers and checking everything. As said, this caused a lot of outcry. Whale Panda says there's not going to be a reorg. No bailout should ever be done. 7,000 Bitcoin is not that much to Binance. It's not a good idea. Jimmy Song says that back at the envelope math for a 58 block reorganization, current confirmations for the transaction that took the money from Binance, minimal cost is 58 times 12.5, so 725. And that assumes that every miner would get roughly the same TX fee in the new chain, and that 100% of miners go with this scheme. That's perhaps the most difficult component of a 52, 58 or more block chain reorganization. Not only is it extremely costly, but it would require a level of coordination amongst decentralized mining entities that may or may not be feasible or possible. It seems as though that CZ circled up with many of these mining entities, Jihan Wu included, and they decided not to pursue this chain reorganization. Just due to the fact of that not only was the outcry huge, the costs were a bit prohibitive, and ultimately, as we'll see momentarily, this does kind of call into question the notion of decentralization, what that actually means, and to what extent the Bitcoin network can reasonably be considered decentralized. After all, having an operational definition and a idea of decentralization that is consistent is key. So it's not sufficient just to call something decentralized. That's not to say the Bitcoin network is not amazing and that it is distributed in a very unique way, but it offers some interesting machinations and insights as to how these kind of systems are actually configured out in the wild, in the real world. And CZ, to put this to bed, it's not possible. The Bitcoin ledger is the most immutable ledger on the planet. Done. So he wants to put a lid on this potential social faux pas and gaffe that he's made in the face of a really terrible hack in front of all of the crypto community. Now, we're going to move on to talking about Bitfinex. Bitfinex, we've covered extensively here on the Cryptide channel. We've talked about Bitfinex and Tether, some of their unscrupulous activity, some of their interesting activity that may not be unscrupulous. One thing's for sure, raising up to $1 billion in Tether is a bit strange considering the recent drama that's unfolded. But that is exactly what they want to do. They want to run a initial exchange offering and offer some tokens that would raise up to $1 billion worth of Tether. It's not exactly sure what the function of these tokens would be on the network. Perhaps just a capital raise as in the traditional financial markets. But it's definitely problematic, especially in more developed, robust economies. They're with Bitfinex and Tether, both of which are the same entity as revealed by the Paradise Papers in 2017. They've been embroiled with legal allegations from the United States court. And as well are not on too great terms with the European Union given their involvement with Polish banks and some interesting money laundering that has occurred in the past that using financial institutions based in the European Union. Now, not only that, Bitfinex users are having some trouble withdrawing funds, and there's been $430 million drained from the exchange's cold wallet. So weird things are happening. iFinex, the parent company of Bitfinex, was working with the payment processor Crypto Capital before things went awry, and they tried to cover up an $850 million loss in which these funds were seized by United States authorities for much of the unscrupulous activity that we mentioned earlier, such as money laundering and shadow banking. Now, that's not necessarily something that is morally reprehensible at its core, but when you start lying to your users, it's definitely not living up to a level of fiduciary responsibility that one would expect from an entity with near $1 billion assets under management. One thing is for sure, nobody knows what's going on for sure over at Bitfinex. Some are speculating this could be the nail in the coffin for their liquidity. Some believe that this is just a normal occurrence that happens with exchanges from time to time. But as seen with Binance, only 2% of their funds were held in the hot wallet. So seeing this amount of Bitcoin being moved around definitely raises some eyebrows and raises some suspicions. And for individuals who are using Bitfinex as an exchange, raises a bit of fears. Here's a montage that we can take a look at. Let's open this in a new tab. And you can see here, unfreeze my account so I could buy tokens and withdraw. That was a few days ago. Please, any minute they can withdraw my funds. Bitfinex is dodgy. Don't be fooled by the high price of BTC. It's a scam. Now, that's something that's a bit unsubstantiated. I wouldn't go so far as to call Bitrex an outright scam per se, but they definitely, as said, have some unscrupulous activity, and individuals have been left waiting with bated breath to receive their own crypto. Perhaps I spoke too soon. Maybe it's not their crypto, because again, not your keys, not your coins. So while this is extremely unfortunate, and I don't believe any user should have to suffer through this arduous, centralized merry-go-round of trying to get their funds, it is indeed very, very unfortunate. But this is kind of the price that is paid at times with centralized exchanges. Not to say that it's a price that is deserved, but it's kind of how it goes, unfortunately. And this is why having some level of regulation in the space is definitely beneficial to help to prevent this kind of unscrupulous activity that ultimately victimizes the users at the end of the day. Returning to this event, some are saying it's Mt. Gox 2.0 in the making, but as said previously, only time will tell with a lot of this stuff. We've covered extensively on this channel the history behind Tether and by extension Bitfinex, and I'll put a link below in the description so you can get up to date on the history of Tether and Bitfinex if you so desire. There's a lot to uncover there. Moving along, Facebook is reversing their ban on cryptocurrency ads, which is perhaps not too surprising considering that they've talked about launching their own stablecoin. It would be a bit interesting if they decided to take a hardline stance against cryptocurrency while working on their own cryptocurrency. So it seems Facebook has turned this around and said, while we're still requiring people to apply to run ads promoting crypto, starting today we'll narrow this policy to no longer require pre-approval for ads related to blockchain technology, industry news, education, or events related to cryptocurrency, said the social media website. There's been a lot of talk about Bitcoin not blockchain, blockchain not Bitcoin, but it seems Facebook has decided that indeed, because they don't own Bitcoin, they're more of a blockchain kind of entity. This came after a lot of issue with scams and cryptocurrency advertising, something as well that plagued CoinMarketCap, the entity over here that is still displaying flagrantly fake volume on its website. I have an ad blocker on, but in 2017, if you were to go to CoinMarketCap, you would see all kinds of advertisements for blatant Ponzi schemes like BitConnect and some other schemes that offered even greater daily returns. One thing's for sure, you can't guarantee returns. That's ultimately not how financial markets work. You're going to have good days and you're going to have bad days. And unfortunately, everybody who was a part of these scams had a bad day when they closed down and ran with the money. This is something Facebook did not want to have associated with their platform. So in 2017, issued a sweeping ban against any kind of ads for cryptocurrency, following Google, which banned cryptocurrency ads in March of 2018. So it seemed as though the circle was closing on cryptocurrency advertisements around the greater web. But given that there has been a bear market, and this space has had time to mature in a bit more robust manner, it seems as though that they're being a bit more liberal with allowing legitimate projects after a bit of pre-approval and review to advertise on their platform. So this is a beneficial sign of a maturing space, in my opinion. Here we have Angela Walsh. She has received a lot of flack in the space, most of which I think is unwarranted. I could see how some individuals may see her as trying to force cryptocurrency and Bitcoin into these existing legal frameworks, which isn't always the case. Bitcoin was designed to try and get away from these existing frameworks to some degree. As I said, some regulation in this space is imperative given that it's going to be working alongside the existing financial system for the long-term foreseeable future. After all, Rome was not built in a day, and I do not believe that Bitcoin is going to usurp the global financial system, at least in the next 10 to 20 years. However, it seems that that may well be an inevitability given how technology is progressing in society. Maybe in 50 years, I'll be able to talk to my grandkids about how I started looking at this interesting kind of thing, and now it's the new digital gold. Who knows? But Angela Walsh is asking some really great questions about how Bitcoin might fit into this existing financial system, and as said, she gets a lot of flack for it, some of which is unwarranted. She's asking, given the fact that this reorganization was proposed, has the veil of decentralization been lifted such that regulators, policymakers, businesses, adopters, techies, etc. will begin to see crypto in a new way, one that recognizes the human agency and power at the core? It's definitely something that exists. Miners, even though they are distributed geographically and in terms of interests, They are indeed the agency that is undertaking action to power the Bitcoin network, and as diverse as these interests may be, they very well are human interests. She's not referring to specifically Bitcoin Core. She's saying human choice is what matters. That's something I think everyone can agree with, really. If human choice is indeed what drives anything forward. Without it, it'd just be kind of a state of nature situation. This event should make regulators, policymakers, and those building atop crypto systems think harder and recognize that that understanding of them is very shallow. And in some cases, this is correct. We don't know how to govern or regulate or use them yet because we don't understand them. This is why approving financial products, integrating crypto assets like Bitcoin or Ethereum, is incredibly risky. The financial system is yet again putting the cart before the horse and seizing on crypto assets as the latest and greatest way to make money. And that's not really the only component here that Bitcoin and Ethereum and these other crypto assets present to the wider community. It presents a way to liberate individuals from the existing financial system that in some ways and in many ways is predatory in its capacity and ultimately puts the burden of using such a system over the long term on the individuals in a disproportionate manner. Consider inflation. Food and energy are generally not accounted in inflation metrics because those numbers are considered too variant. But ultimately, we all have to have the lights on. I have to have the electricity to record this video, and we all have to eat. So ultimately, economic inflation, when controlled by a centralized entity like the Federal Reserve, over time bleeds into the markets and harms the individual who's using this currency. The US dollar has lost about 98% of its total value since the creation of the Federal Reserve all the way back in 1913, roughly. There was a closed-door meeting where they kind of sort of formed it beforehand, but they don't really talk about that. That's neither here nor there. This is just kind of a difference in perception, perhaps. Angela Walsh perhaps views this as using the existing system to contextualize these digital assets, whereas many individuals, especially young individuals and individuals who share the cypherpunk ethos, they don't want to fit these crypto assets into the existing framework, but rather take the pieces of the existing framework that are beneficial and are proven to be time tested and use these crypto assets as a new type of platform that offers a bit more resiliency and robustness and a more human-centric form of decentralized open finance. Really, there's no clear answer, though, and there's no objectively correct answer. This sort of thing is evolving constantly and consistently and asking hard-hitting questions like what Mrs. Walsh here is asking, I think are part of a fantastic dialogue. And I think it's unfortunate that in some respects we see the crypto community lashing back in such a unpalatable and angry way, rather than taking the time to try to do their best to set aside their own biases and suss out how we can best answer these questions, not only for ourselves, but for the benefit of the entire ecosystem. With that said, I hope you found this material interesting and informative. I certainly always have a good time recording it. For now, that's all we have to cover. Let me know what you think of this kind of content below in the comments. All the links below in the description. Thanks so much for watching. My name is Paul. We are Cryptide, and remember, the tide is rising, as is the Bitcoin volume and price. It's happening.